Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Salesforce, ticker symbol CRM. I wanted to just go through the actual DCF model and not outline everything that Salesforce does because I feel like it would be kind of redundant, and I've done it multiple times on the channel. But with the new tariffs and all the tech stocks kind of falling out of fashion in a lot of ways, I thought it'd be very interesting to take a look at Salesforce now, especially after their earnings and their lower than expected guidance on their revenue, because I think that this stock could be very undervalued currently. And I kind of just want to go through the metrics myself so I know if I want to add more of this stock to my personal portfolio as well. I did make a little bit of moves on Monday. I think I added $500 worth of Amazon and then a little bit of Energy Transfer into my portfolio. But I really want to look more at tech companies and things that are maybe more risky just because they're falling so much. And I think that Salesforce kind of fits into the Trump tariff drop perfectly. They're not going to be as affected by imports, and their long-term track record is really solid. Starting off here, we have the weighted average cost of capital of 7.61%. This is obviously heavily skewed by their market cap being 95.62% of the weighting compared to only 4.38% of the weighting being debt. And the cost of equity is 7.885%, which kind of falls in line with that weighted average cost of capital. Now, the cost of debt after tax is obviously dropping this number down a little bit, but we could see here that this weighted average cost of capital is very close to the cost of equity. Now, moving on to the DCF model, we could see that Salesforce has been hit. The stock is down 8.68% in the last year. The market cap is $274.9 billion. The price to earnings ratio is a little bit loftier than a lot of more traditional value stocks at 45.16, and the annual dividend yield is 0.56%. Salesforce does have very good average revenue growth, 15.22%, with none of the years being negative, which is very shocking and very good. So they've consistently been able to raise their revenue, and I've talked about this plenty of times with Salesforce. It's very hard to get out of the Salesforce infrastructure once you're in it, and it's not worth it for companies to get out and do their own stuff after they've sunk all this time and money into Salesforce. But also, as Salesforce gets more customers, they're able to improve the products and entice more customers to come into Salesforce. I also think that Agentforce is going to be really big into the future. And overall, I think that the company is very high quality, but it usually sells at a high premium because of the growth that you're getting pretty consistently. Now, it is worth noting that from 2024 to the trailing 12-month number, we do have the lowest percentage in revenue growth, and the percentage of revenue growth is lower each year from what I can tell. But it's still positive every single year. You don't have since 2021 and using the trailing 12-month number, we haven't had a period of time where Salesforce has underperformed the previous year. So there is still growth, and we can see that in the free cash flows as well. From 2023 to 2024, we even have a 50% growth in the free cash flow. So the stock overall is very solid. Now, this current model is about even, and that's only with a growth rate of the free cash flow of 6%. We can see that the average free cash flow growth rate is 31% and the average revenue growth rate is 15%. So if Salesforce only grows the free cash flow on average 6% over the next 9 years, we can expect that the stock would currently be worth $284.10. I think this is a very, very conservative metric. I think that it'll be closer to 8 or 9%. It might drop off a little bit, but I think that even at 8%, you're getting a 14% upside to this stock, and the fair value is $327.62 per share. So I think that this could be a good buy, and personally, after actually modeling this, I think that this is going to be the stock that I throw some more money into, along with Energy Transfer. And I also want to do a DCF on American Express as well because I think that's very enticing. But Salesforce looks very undervalued here. Now, if we go through, and I do not expect them to be able to grow at this rate consistently, but let's say over the next 9 years, they grow at 31%, then the stock's worth $1,500, which I think is completely unrealistic, just to be frank. But I think that 10% is honestly not too far off. I think in the short term, so in the first or second year, we're probably not going to get that. But I think that they're going to be able to consistently grow the free cash flow by at least that 8% metric. I think that this is totally attainable and realistic. And even if they mess up this first year, I think that after that first year, they're going to be able to hit that 8% number. And I still think that the free cash flow is going to grow next year. So I think that this is an amazing opportunity to get a company that's very high quality, very high growth, and just a good add to your portfolio, especially because of the network effects that you're getting. And you're not having to worry about the problem of them not being able to grow into the future just because people who are already existing clients, it's very hard to leave. And new clients want to come in because they're able to offer better and better services. So I do think this is a little bit of a riskier company than the ones I normally look at, but I think that with these stocks falling out of favor, it may be time to get in, and I'm definitely going to buy a couple of shares as long as I can get them under that $300 threshold once I get more money into my portfolio. Obviously, this is not financial advice. I'm not a financial advisor. I want to make that very clear. This is just my personal opinion, but I think that Salesforce looks very good at this valuation, and I'm not going to sell a single share that I already own, and I plan to add more to my portfolio because I was really hesitant with Vici because I already had $5,000 into it, and I wish I would have bought more under $30 because I don't know if I'm ever going to get that opportunity again because now the stock's trading for around $32.50. I still think it's undervalued, but I think that now with a lot of the tech stocks being transitioned out of, there's a lot better opportunities in the market than defensive stocks, which I already own and don't plan to sell anyways, just because I think that there's starting to be more of a premium on defensive stocks as there's more volatility and uncertainty within the markets, which makes Salesforce a perfect opportunity to get into because I think it has really been oversold. I think that this is an amazing company, and I'm going to be adding more to my portfolio. Let me know what you guys think of this analysis in the comments section below. Please hit subscribe if you've made it this far, and thank you so much for watching the video. Bye.